Everybody, this is John. Welcome to the free video. Let's look at SHAK, which had earnings, and then we'll look at the markets. This is a weekly chart and a daily chart. Now, if we look at SHAK, we can see after hours it is down about $4.18. So the way we constructed this trade was to do essentially an iron fly, which is a bet that the stock will stay within the expected move. Now, the expected move was about 350. So you can see it is down a little more. It's actually it is down a little bit more than the expected move. And one of the things I like to do is that I've found oftentimes is that the expected move overnight will act as support. This is what happened with Disney last night. I reported, it went down, and then it turned around and went positive. Now, is that what's going to happen with Shake Shack? I don't know, but I certainly like to use that area to buy stock. And you can see here after hours, Shake Shack did drop pretty quickly, but is finding support at magically the expected move, which is one standard deviation. And so I had some orders to buy in case it did dip down here at 37.50. You can see I'm down a little bit right now. I'm fine holding these overnight. Typically, even if the earnings aren't fabulous, this does act as kind of a floor. And potentially you could even grind a little bit higher the next morning, depending on all the after hours kind of stuff and things like that too. But I have found that that's a pretty reliable support level. The thing is, of course, if earnings are horrible and it can just blow through it and you get like a 3 or 4 standard deviation move, it can hurt you quite a bit. So you can buy puts first in advance to act as a stop loss. Now, I didn't do it for this stock simply because it's a smaller stock, but if I'm going to try this on something like our price line, of course, you got to buy some protection so you don't get completely blown out of the water unless you're doing like one share of stock. And in terms of the overall markets here, the one thing I'm noticing now, we did get another sell signal today. I'll show you that in a second. The main thing I'm seeing here, though, is that when we saw this move here, we had what's called convergence. That means that momentum was matching the move, meaning that the move it made sense. Okay, price was making a higher high, momentum was making a higher high. That makes you feel warm and fuzzy about buying that kind of a rally. On the other hand, here we've made a higher high, from here to here, and momentum's just fallen off of a cliff. That's called a divergence. Now, that doesn't mean that the market's going to roll over and die, but it is a very strong sign that you want to be very, very careful of any sell signals. Okay. And then if you look here, this is a specific sell signal that I look for. We got one here on June 10th. That was the last one we had. And then we recently had one here. We did get the sell-off to the mean. That's at a minimum what you're looking for. And we just got another one. Now, a sell-off to the mean, that doesn't take us very low, but it can result in a move back up to the 21-day lows. Okay, and of course it could turn into something bigger if you've got something like a squeeze setting up. At the end of the day, I do not like the long side here. I shorted here, made a little bit of money, got stopped on the rest. So, being short in this market is generally not been profitable for much of the time. But if you can catch a quick move like that or something, I do think we're going to get at least a pullback like that, and that's tradable. Okay. So in this market, while I am looking to start hedging to the downside, and in the premium video I'm going to talk about the other, it's the skew, it's the put call ratio. I mean, you got a lot of things setting up here with the red flags all over the place. But the thing to keep in mind is it doesn't, don't be scared of the long side in this market in terms of all stocks. Just remember that a stock market that goes down will take down about 85% of all stocks with it. So there are stocks that I like to the long side. Now, Ulta, you can see, yes, there are some divergences here, meaning that price is going higher, but momentum is going lower. But this is a stock that essentially has been going up week after week after week after week after week because it is growing so well. It does have earnings coming up, I think in a couple of weeks at this point. And I am anticipating that this will continue to move higher. At the very least, because I'm a little nervous about the market, I will focus on selling put credit spreads on this, and we can take a look at that real quick. It's not too late to do it. Let's see, and just looking at the monies, if I can get this window to move. So the at the money, the 260, 250 puts, sold them for $1.40. They're like $1.27. You can still sell them here. These are 9 days out, and if you notice here, if you go out to 16 days out, notice that the implied volatility jumps to 49% from 16%. There's earnings that week, so I'm anticipating a little bit of a run, regardless of what the market does. Okay. Now, one of the biggest questions I always get is, well, what is this pinning? What is this unusual options activity? I got to tell you, if you want to learn about unusual options activity, the guy to talk to is Chris. And if anything, it's worth checking out this link, simplertrading.com/canary, simply because of the creativity of that short link. I thought that was pretty great. I went through this last night in terms of all the details, so I won't go through all the details again. I'll just say that I've never seen anyone who understands the options market in terms of unusual activity and what it means and the implications that it can have on the underlying stock than Chris. He just knows this stuff. He's traded this stuff for over 34 years. He was on the floor. He watched other things come together. He could see all the reactions. And if you want to learn this stuff and give yourself an edge, because in the short term, stocks are impacted by huge open interest, unusual things, because guess what? It's a tell. How are traders getting positioned? And this is the way to learn it. For this class, he is going to do a couple of hours of instruction this upcoming Tuesday, August 16th. It is only $97. I mean, if you have not ever taken a class by Chris, that's an insane way to get in there and really understand his knowledge for just $97. If you want to do live trading with him, it's $197. That includes this. Again, I think this is the no-brainer class of the year in terms of upping your education in the options market. Hope it helps. You guys have a great night, and we'll see you at the next update.